I'm Ben Reppond. Welcome to my YouTube broadcast. Today is November 5th, 2025. These are my market insights. I'll begin with the dashboard. So these are organized top to bottom, rate of return year to date. Emerging markets and developed markets, EEM, EFA, those are ranked at the top. Those are the best performing indexes of what I'm showing you. And then the 4 U.S. equity indexes, NASDAQ 100, S&P 500, Dow Industrials, and the Russell 2000, small cap index. And then long-term government bonds, TLT. They are the dots, are they above or below their moving averages? The 4 moving averages, all but one on one moving average is positive. So still a very positive market. Last week, there were 4, you can see in the yellow box, 3 that were negative and 4 that were positive. So a mixed week. The S&P 500 breaks down into 11 component parts, 11 sectors. And these are those 11 sectors. The ETF is in the far left. The description is in the second column. And the yellow box is the last week and pink box year to date. Of these, this is interesting because this is a very different picture than we saw on the other chart. There are 25 out of 44 green dots, which means there are 19 red dots, as opposed to 1 on the previous chart. And then year to date, they are all positive, except for consumer staples. The S&P 500 continues its run on a positive direction, still going up. Sometimes it's slight, sometimes it's more, sometimes it's even down a little bit. But generally speaking, you can see that dip in the far right. That was late March, early April. And after that, they just took off and they haven't really retreated ever since. Same chart, except I put it on a candlestick basis. So a very positive week. This is it's still a weekly chart, and 1 candlestick equals 1 week. I take it from there and move it to a daily chart for just 2025. So this begins on the far left, January 1, through today. And that is, put a little bit of pullback the last couple of days, but basically it's a very positive chart. This is a relative strength chart. The NASDAQ 100, numerator, S&P 500, denominator, meaning when it goes up, it's favoring the numerator, NASDAQ 100, and when it goes down, it favors the S&P 500. Look at what this does. At the very end, it goes way up. So in other words, the NASDAQ 100 has been way outperforming the S&P, the broad market, S&P 500. But that pattern at the very end is a little bit unusual. It's that divergence between the S&P and the NASDAQ is normally not enough to exaggerate that kind of a move. Growth versus value. Now, same thing. You see at the very end, it's not a tick up, it's a big line up, and that means that the NASDAQ 100 is outperforming, the growth stocks in the S&P are outperforming the value stocks. The S&P broad index, in this case, is numerator, and the Russell 2000 small cap index is the denominator. So large cap versus small cap. When it goes up, it favors large cap. It goes down, favors small cap. So again, a big move up, favoring large cap over small cap. U.S. dollar. Now, I put two lines on here, two arrows, just to show you two patterns. Since the first of the year, up until about July, it went the dollar went down. From July to present, let's say this is about 3 months, it's gone the other way. It's gone up. So it's not one pattern, it's two patterns. When you compare the S&P 500 to another country, you pick the country, we could pick one. I just picked South Korea because I felt like it was a good measure of how other countries are doing versus our market. So the S&P 500 relative to other markets has not done well this year. And that you can tell that from this black arrow, because look at that line. When it goes down, that favors the denominator, in this case, South Korea. When it goes up, of course, it favors the U.S. stock market. But for pretty much the entire, 9 months, it has been going down. The volatility index is a measure of usually downward volatility in the S&P 500. And that's illustrated here from the high when it went up in early April, quite high. And then since that time, it has come down and now is down around 17. The long-term government bond, TLT, it's a 6-year chart, has been going down. But during that period of time, there are short periods where it goes up and then it turns around and goes back down. I think as interest rates go up, I think they will. And as they go up, then bond yields go up. And if bond yields go up, the price of bonds goes down. So I don't think there's a lot of upside in government bonds at this point. Bitcoin had a positive week, barely, not much, but it has, been going kind of sideways for about a year. And gold has gone up a lot, silver's gone up a lot. Bitcoin has not. So I don't know. I don't even know what causes silver and gold to move, and I certainly don't know what causes Bitcoin to move. I have an opinion, but it's not based on fact. Gold had a pullback last week and this week a little bit. And the combination of those 2 weeks is represented by that down tick at the upper right. That's the correction, if you will. The longer-term picture is the black arrow that's going from left to right. Silver went up a little bit. That's represented there at the very end. I don't know if you can see it, but last week it came down, and then this week it went up a little bit. And but over time, just like gold, silver has been going up quite a bit. Okay, these are the numbers. So gold was down 2.3% this week, and silver was down 0.7%, so virtually unchanged compared to a week ago. The gold-silver ratio is 83 to 1, meaning gold takes 83 ounces of silver to equal 1 ounce of gold. This favors silver as a better buy at this point. A monster box, 500 rounds of silver, generic silver, is $25,350. This includes a $1.81 per ounce markup over spot, and the cost per round is $50.70. Okay, if you have questions or comments, leave them in the comment section below.